Subscribe to the channel and press the bell icon to never miss any updates. Hey everyone, this is Anuj Vohra here, and in this particular video I will be talking about how to invest in these type of bull run. The market is at all-time high, and if you are new to investing, you would think that what if I invest my money and the market fails? I may see negative returns at just beginning of my investment journey. So there are basically two approaches. One type of people is saying that stay away from this type of market, and the other is saying that it is the right time to invest. Now there are basically if you consider my opinion, timing is not the important thing. Time in the market is important. Here is what I mean. If you stay in the market for the longer period of time, you will get benefit for sure. But if you keep judging that the market is all-time high, it is better to stay away from the market, and the market has now corrected, so it is better to invest right now. So this type of situation is very difficult. You will definitely make mistakes for judging the market. So during this type of situation, if yes, that you should definitely consider investing in the market, but there are some different strategies that you need to follow. At this type of market, if you consider investing 100% in equity portion, then if the market corrects, you may see that your portfolio will take a lot of time to recover. So in this particular situation, a lot of question would have in your mind is that how to invest, where to invest, how much to invest, and how long to stay invested. So in this particular video, let's talk about how you can invest during this type of bull run and how you can create wealth by staying conservative. You are not taking more risk, but you are staying conservative. So let's begin this video and let's understand how you can invest during this type of bull run. So I won't recommend you to start your investment journey or to invest at this type of bull run when the market is at all-time high. I won't tell you to invest in stocks. Rather, I would tell you to invest in mutual funds where you get diversification. Your money will be invested in 30, 40, 50 companies. So that is why you get benefit of diversification. But in which mutual funds? There are a lot of mutual funds like large cap, mid cap, small cap, multi cap, thematic fund, international fund, and so on. So in which type of mutual fund you should consider investing? So the ideal mutual fund in this kind of situation is Balanced Advantage Fund. And here is what happens in Balanced Advantage Fund. Well, the market, as I just said, that we can clearly see that the market is at all-time high, and the obvious question that individual investors have in their mind is that what if the market fails? And there are definitely chances when the market is going really high. In 1 and 2 years, we never know when the market may fall down. So you may see negative return in the portfolio at just the beginning of your investment journey. So the ideal way of investing is to go for Balanced Advantage Fund. Now there are many AMCs, which are asset management companies, offer Balanced Advantage Fund. You can go and check out multiple funds. So what happens in Balanced Advantage Fund is that your money will be invested 30 to 35%, or I should say 35 to 40% money at this point will be invested in equity portion only. Let's say you invest 1 lakh rupee in any Balanced Advantage Fund. So your money will be invested 35 to 40,000 rupees will be invested in equities only. That means if you go with pure equity funds, your 100% money, that means here your 1 lakh rupee will be invested in equity funds. But on the other hand, if we go with Balanced Advantage Fund, only 35 to 40,000 rupees will be invested in equities. That means you are not taking more risk. On the other hand, you get 65 to 70% of portion in debt. That means that you are being conservative when the market is at all-time high. When the market is performing really, really well and with no such kind of fundamentals, so that is very alarming. That is why you should stay away from equities. But you can't stay away completely, but you need some growth to grow your portfolio. So that's why we are saying that you have 35 to 40% portion in equity, and on the other hand, the remaining portion will be in debt. So during this kind of situation, what happens is you get benefit when the equities grow, on the other hand, you are being conservative when the market falls. So this is the approach that you need to develop. Another thing in balanced advantage fund is that you get benefit when the market falls, and here is how. The advantage of balanced advantage fund is that it is a dynamic fund. For example, if the market falls, the fund manager would increase the investment portion in equity and would decrease the investment portion in debt. So for example, if the market falls down from 61,000 right now to 50,000, the fund manager would allocate 50-50, like 50% equity, 50% debt. Right now at the moment, let's say it is 35% equity and remaining portion in debt. But when the market falls, the fund manager would increase the portion. So when the market will recover, you will get benefit. So this is the approach that you need to develop, that this is the way, this is the type of mutual fund that if you invest, you will get benefit like 10 to 12% return without taking more risk. Now, if you go with a large cap, mid cap and all such kind of funds, you may see massive volatility, because if the market falls, you may see massive ups and downs in your investment portfolio. So this is the approach that you need to adopt during this kind of bull run. And if you need more help regarding mutual fund investing, I will put a link in the description below. Go check out and book my investment consultation call. So I hope you like it, and I will see you in the next one.